CPI day has kind of been the thing in the back of our minds for the past, give or take, 2 weeks. This is going to dictate the movement overall for the next, in my opinion, next Fed meeting, to say the least. Right now, we have this overall consensus that inflation is dropping, and it has been. As we look at the data, it has been on a slow decline. But as we eke and as we crawl towards, the idea of pausing rates, this has to be our focus right now. Now, again, I continue to say this in every video. It may get old, but I'm going to say right now, fundamentals and technicals are not aligned. Okay. Although there's major concerns out there, we've already retraced 30%, on the Nasdaq, on ES, on Dow. Massive retracements, which you could argue hasn't happened in over 10, 15 years. These are the major concerns. Yes, COVID dipped, but we bounced right back up immediately. So when we look at the slow retracement, arguably recession, arguably a bear market that we were in, you have to kind of decipher where we're at and ultimately what's going to move us going forward. And that's what we're going to talk about here today in the video. And before we get into that content, I have to ask you to do 2 things. Consider liking, consider subscribing, because today and every day we continue to go over the market, key fundamental news on the market and everything about it. Unbiased, to the point, win, lose, draw. We go over exactly what we're doing and how we did it, again, every single day. Let's get to it. So if you remember in yesterday's video, we talked heavily about the range that we've been trading in. There's no reason to jump into a million trades. There's no reason to start going long or necessarily even going short. There's no real reason why. Because if we look back over the past week and a half, we've been stuck in this range. Yeah, we pushed a little bit above it and we loved it. We traded that upside, but we've been stuck really in between 13.2 and lows of 12.95. But arguably this remains, like I say, to be an issue because technically speaking, you remain bullish. Why? Because if we look at where we are, we continue to make higher highs and higher lows. This is the textbook definition of bullish behavior, bullish channel, bull market, whatever you want to say. And if this continues to happen on the weekly and daily chart, you will push yourself into a bull market. Okay? That's why there isn't a fundamental reason why you become in a bear market or a bull market. It's based on technicals. It's based on how much you move up in a going period of time. And if you look at the beginning of this year so far, we've already moved up 20% on the market from lows. I mean, pretty incredible. This constitutes the definition so far of putting ourselves back into a bull market. Not saying we are, I'm just saying understanding what's happening because there's obviously a lot of things happening here. But again, what are we watching for? Again, I continue to say this. And if you want to take anything from this video, besides CPI, besides anything else, understand this. If you get below this level right here, 12.95, it's in the newsletter, it's on Twitter, it's everywhere. Links are all down below if you want to check those out. I'm telling you, you are not bearish. There's not really a trade worth going short on unless you're scalping until you get below 12.95. Until then, I am bullish. Until then, I am being patient, waiting for the CPI, but ultimately I'm looking for upside opportunity as long as we're above this level. Why? Because if I'm looking to short, let's identify where we're trying to short down to. If I'm trying to go short from, let's say highs of today, like 13.13 on Nasdaq, I'm basically looking at, 100 and maybe almost 200 points of downside. Whereas the upside opportunity back into highs is, a little bit over that, but it's still like a 1-to-1 risk to reward. That's not really viable for what I'm looking for. Although what I will say is possible that you're trying to carry a little bit of a channel and push down, but even though you're thinking that, you're still making higher lows on the 4-hour chart and higher highs on the 4-hour chart. So again, trending up. Okay, textbook, don't shoot the messenger. I'm just telling you, okay? I'm just telling you. Now, the next thing to look at is overall what's happening here on volume. Volume here on the SPY over the past few days, and it has been less than appealing, to say the least, right? Our average 30-day volume on SPY has been around 100 million, 103. It's drastically dropping every day right now. So you know that. But we came in at 51 million in the after hours, maybe 55 at the highs. I doubt we even get that much volume in the after hours. But that's where we're at right now. So 50, let's say 53. Half the volume, 50% less of your average volume. Makes sense. We have CPI tomorrow. So this is where I want to kind of dive into a little bit, is in CPI. Now, CPI tomorrow morning, it's an hour before market open, so 7:30 Central for me, so an hour before market open, 8:30 Central to my market open. But I want to talk a little bit about where we're at, and I want to get your opinion. So if you have an opinion on this, I would love for you to comment down below of what do you think is gonna happen here? Because, and do you have an issue with the way that they are setting these revisions, because revisions, in my opinion, are like a really big issue. The fact that they come in and they revise expectations like 4 times a quarter. I think a lot of you guys would agree. I've seen a lot of your comments, and we will answer all your comments. So just know that I'll get back to them. But so looking here, core CPI and regular CPI. So CPI, we talked about this vaguely, I believe, a day ago, the day before that. If we look basically over the past year, let me zoom into these numbers so you can see a little bit more clearly. So basically you have your forecast and you have your actual and then you have your revision. So sometimes we'll have an expectations of 8. We came in below 7.7 and then you actually revised up to 7.8, but that takes time. That's the revision. Like, what do you think about that? Do you, I come across the same way. I'm like, how do they like mess this up and have to revise it later? I don't really like what changes with the data pool like that they calculate it differently. I do wonder the same thing as you. Okay. So we look at this and our forecast, I believe, is around 5.6. Now they've changed this forecast, which in my opinion could hinder the bull thesis to the upside to a 5.2. Again, I use this analogy as this. Okay. So hypothetically, if I'm looking at what's happening here with this glass, right? I have this glass and I have this Coke, right? This has been sitting on my desk since lunch, right? So if I fill this up, hypothetically, right? Fills up, right? So let's say this is inflation. Inflation's here. Now, if inflation starts to drop, hypothetically, we're not using it just as a thesis of this cup and Coke, but it should get harder for inflation to drop as you get closer to being either flat or towards your target, right? Because if inflation's very, very inflated and very high and out of control at, for instance, it was at like 7%, whatever it was at, right? Getting it, like knocking it down a little bit from like 7 to 6 is easier than knocking it from 4 to 3. We would all agree on that, right? It should get harder as you move along, right? And it should be harder on the market. But I want you to get a visual of expectations here. And I think expectations are disconnecting. So we'll see, and you'll see my point. So we went from last April from, 8.1 to 8.3. So it went up again to 8.8, then 8.7. And then we started to decline from July into August, right? 8.7 and 8.1. Pretty good, right? Pretty good. So, I mean, actual came out a little bit higher, but overall, still a big drop, right? That's why they're anticipating big drops here. Okay, then 8.1 was expected to be flat. Say a little bit flat, actually went up a little bit. Okay, then 8%. And so you can see their expectations originally were very small, like, barely dropping. That's all they expected, right? And then they're like, okay, well, we're dropping. Let's start really swinging for the fences. And it happened. So a 0.7%, so almost a full point drop in CPI, a 0.8%, another almost full point drop, from 6.5 to 6.2, you actually rose. This was an issue. If we go back to January, then 6% flat. And now they think it's going to start happening again here, right? They think we're going to go back to this route, back to this thing of dropping almost a full point. And that's where I think there's a problem. And that's where I think we open ourselves up to the possibility of failing. I think this is the possibility of creating an issue, because now we think we're going to drop just a massive drop from February to March, which is, it could happen. And again, I think right now sitting on the sidelines is like the best bet going into any of these data pools. My personal opinion. If anything, stock is the only way to go for me. So we look at that. Now, the next thing we have to look at is what really matters, in my opinion, which is core CPI. And if we look at core CPI, I think it gives you a better visual. So we have year over year, month over month. So year over year first. If we look at year over year and we zoom down, just down here like we can see this is dropping a lot less, right? Core CPI is, they put more weight on core than they do standard CPI. The Fed has said it. It's a clear statement. It's not Tyler's words. Google it. I don't care. Do your NDD. Now, core CPI has a history of missing more than CPI. Okay, so we can see expectations, flat, miss, miss. I mean, over the past year, there's been way more misses as far as rising to the upside in comparison to CPI. So they're expecting core CPI to rise from 5.5 to 5.6. Okay. Now, the underlying issue here and the underlying thing that everyone's going to comment down below, and I know, believe me, I'm trying to beat you to your comment. I want you to comment. I want you to ask questions. We love to ask questions here. The channel's about education. It's not about, giving you and telling you exactly what to do. Okay. If I wanted to do that, I wouldn't be doing this. I would not want to handle YouTube telling you what to do all day. But the underlying issue here, and everyone has an issue with, and I see the issue is oil. It's crude. It's the value of oil, because oil has been a common denominator. When inflation spikes, when inflation rises, oil is typically behind it, and oil is typically stair-stepping up as well. So oil is typically rising, causing a lot of inflation on the back end of energy costs, deliveries, etc., and supply chain, right? It's funny, we keep saying supply chain is the issue, but we don't mention that oil and energy prices are the bigger issue. So today we saw more news on oil. So when we go to oil, and again, I'm sorry, I don't mean to blur your eyes by looking at this like kind of white chart. This is the one that I personally use. And I had a video this weekend go over like an educational video, just so you guys know. If you guys want to understand why I use it right here, the complete playbook for SPY and day trading, it's a decent video, go check it out. Anyways, but this is oil, okay? And this is oil on the daily chart. So bear with me, don't attack me, don't just stay with me. Basically from November into January, early March, right? You traded in this range from 81 to lows of 72. That's where we were. We broke down and then we shot up. Why did we shoot up? Why do we move up like this? It's the same thing that continues to shoot us up, right? Because there's no fundamental change in what's happening with oil and energy, etc. If we look at what's happening there, OPEC, so they're going to reduce the rate of which they're cutting production of oil into the end of the year, and then 2024 the contract's up and they'll revise how much they're producing, right? And so oil has room to go berserk still. Okay, there's no difference in U.S. crude. There still has room to go crazy. Now, I don't want to get on the tangent of the petrodollar. We've talked a lot about that. We've expected the petrodollar to have a lot of issues. We've expected all this over the past year. But what I will say is oil is breaking trend, but there's a caveat to this. Okay, so just bear with me. As you're breaking trend here, just identifying just a really quick rough trend draw. Don't tag me. Okay, I'm just showing you. The caveat is this, and what you're looking for is if you get above like 82, you have room to run like towards 94 on the barrel, which is crazy. Like oil looks really good. Okay, the caveat is this. Why it's not going to affect us, in my opinion, on this CPI reading is because it just started happening so recently. So if anything, you should get a lower reading on CPI and cost of energy, because you had this drop in the beginning of March, right? But I still don't think it's going to affect us. But this is going to start affecting us down the line. Maybe not even next month. It might be the month after, like going into June. That might be when it really starts to hit us. So that's what we need to identify and understand, okay, is where we're at and kind of where we're going. And so and again, people, they love to like argue this fact, but it is what it is, okay? Hypothetically, okay, let's say that I'm selling this iPhone represents like gasoline, okay? And so I take this gas and I drop it off at a gas station. Okay, boom. It's all supplied. It's filled to the brim. They have unlimited amounts of gas right now, filled to the brim. Okay. I paid $3 for this, and I'm going to sell it for $3.30, make my profits, hypothetically, right? We're just playing a game. Now, if the price of gasoline the day after they deliver, the day after I buy it, rises to $4, am I going to increase the price of this gas? Unlikely. It's all based on how much they're paying, how much they're getting when they're refilling, etc. Supply chain, right? Who would have figured, right? And so that's what's happening here. And so I just want to put this argument that just like gas prices didn't drop overnight when this happened, gas prices aren't going to pump when this happens, and then rolling over into the rest of the supply chain. So that's things we need to be considering. And so as we look at the CPI, it's important to realize that and again, before they made that revision of 5.2, I had high hopes. I really did. I was like, I think CPI is going to come out good, has a lot of opportunity. But as they make this, revision, I am a little bit more on my toes. And I'm like, this is not ideal. What I will say is I do like core CPI. I think core CPI could beat 5.5, 5.4. I think it's totally possible, 100%. I think it's possible. The job market is weakening. I think we're seeing sales weakening. We saw another report from Apple last week. Remember yesterday we went over it. Their shipment have dropped over 40%. We're seeing consumers weaken, which is good for inflation, okay? So that's good news there. But it's not going to happen all overnight. And we still have to identify the good and the bad. So I don't want to be biased. I don't want to push an agenda. But again, even me, I was really bullish going into CPI, and then they started making these crazy, specifically at a regular CPI. I was like, God damn it. Like, why'd they make that revision? Like, if they would have left it at 5.5, 5.6, I'm like, okay, maybe we beat it. Possible. So that's where I'm at now. That's what I'm assuming. That's what I'm watching for. That's what's kind of, keeping me from shoving in. Okay. But You're interested, like, Tyler, well, what happens? What do I do tomorrow with what the data comes out at? If you come in close to 5.2, 5.3, close on core as well, you beat on core, you do well, lower on core, I think you're good. I think you have follow through, I think you move up. Okay. And I think you have upside into Friday. Okay. Because Friday's also very big. Friday's the bank earnings. If we go, you can actually look if you want, go to Twitter and then go to Earning Whispers. This is the best way to look at Twitter, by the way. I'm sorry. If you guys want to see earnings, we have them also in the newsletter. I just don't want to pull the newsletter up right now. And I know Jay's going to watch this video and be so mad at me. He's like, you didn't pull up the newsletter? Jay, I know. I'm so sorry. I just had to do this. So this is the earnings on the week. JP Morgan on Friday, United Health Group, which is the biggest medical stock or biotech stock in the Dow, huge, big market cap. Citigroup, Wells Fargo, PNC, BlackRock, etc. Okay, then they're going to roll over into the next big ones. So that we need to be, I understand that this is a big day tomorrow, but then we start rolling into these banks that had the bank crisis. So I think this is very interesting grounds that we're standing on. Also, I'm going to say right now, I like banks where they're at. I like big banks, XLF banks, Bank of America, Wells Fargo, Schwab, Citi. I like those names. Just so you know, I've been saying that. And I keep saying it. We're going to go over Schwab in a second, but that's what we're looking at right now. So again, we have two big catalysts. We have CPI, bank earnings, which are Friday. So keep your eye out, keep your head on a swivel. That's what we're watching for. That's what we're looking for. Going into technicals, your favorite part of the channel, the favorite part of the video. Schwab, again, Schwab, we mentioned this yesterday. This morning had a really nice dip opportunity. It was freaking great. So you drop down 850, you come down to 51, you shoot back up to 52. Cool, nice little scalp if you wanted that. But ultimately, what I want to focus on, I don't want to spend too much time on charts. I really don't today. We had some good day trades today. We had some good trades. And also to Discord link, if you want to check it out, the link may be down below. I think we closed it though last night, or we're closing it tonight. So if there's any spots, check it out. The link is down below, but that should be locked up just in case. We look at Nasdaq. Let's talk about where we're at. Very interesting behavior here on today. Again, what I will say is you are making the higher lows, you are making the higher highs, but you're showing a lot of potential weakness. And again, if we come back down this area, 12.95, I think we're going to break it, to be honest. I think it's unlikely we push down here and bounce again if we make a lower low. So we need to be watching that. Favorite names though, and I said I was going to mention stocks, but I can't help it. I can't help myself, guys. I know what you guys want, and I just can't help but give you the content you want to see. Okay? But before we get into that, we're going to go to cheddar flow. We're going to look at what's happening here specifically on the order chain, option chain. Okay? Got some SPY puts coming in, nothing crazy. Some short, they're pretty short dated. Nothing crazy though. Okay, I know a lot of people are asking about this, so I wanted to bring this up. Qs, nothing crazy, nothing I'm really watching. SPX, I'm really not interested in SPX, but it's a small day for SPX, I'm not gonna lie. VIX, this is the most interesting part. And VIX makes sense because of where you're at. If you go into VIX, you are at your level. This is ultimately where you buy. VIX, 19 down to $17 has been a buy. And you're trending down here. So this is also set up for a potential dip. So that's why I'm very much aware of where we're at and potentially where we could go quick. So that's what I'm saying. I'm not being a pompous bull saying we're going to the moon. No, I'm sitting back saying we put ourselves in a dangerous little area. Things could get interesting real fast. So these are the areas you need to be watching and overall kind of be concerned about. So VIX as well. Okay. So going back in, as you can see there, IWM also very interesting on the day. Big old put order coming in for the 200 strikes in the money. And typically in the monies would not be so interesting to me, but they're for 616, which is very short dated. And if they were in the money, I wouldn't be that concerned, but they're not that far in the money compared to some of these big orders. I know Tyler, $25 in the money. I hear you. Okay. But look at these, 240, 225. If you're here on the channel a lot, then you understand these that I'm watching. But again, very interesting behavior of where we're at. Okay. So very interesting. Definitely watching these. Keeping me on my toes for sure. IWM as well has been a good sign of risk on, risk off. You're at the top of this channel trying to break out as well. If IWM starts breaking out, you have some good signs ahead of you. So that's what we're looking at there. So again, ES, Nasdaq. ES had a monster day today. It continues to move well. Even if you're disconnected, not watching, ES, and you're only watching Nasdaq, 4,100, you bounced, and then we reclaimed this previous supply level that we had here on the 4-hour time frame. Just saying. Was previous supply, we pushed above, pushed back down, pushed above, mounted 1, 2, 3 on the 4-hour. SPY doesn't look bad. ES does not look bad. It looks like signs of continuation. Favorite stocks going into a good CPI. If CPI can bounce, if CPI can perform, I'm going to tell you right now, Tesla, top of the list right now. If we have a good CPI reading, Tesla has all the room in the world to go up, okay? First of all, you're going to most likely quickly test this area right here, okay? Target numero uno. If you have a good CPI, okay? You'll see it happen quick. You'll quickly push up to 92.7, 91.2. I think closer to like 91.8 to 92.7, the dollar range up there. That's where I'm having us targeting. After that, it gets even more interesting because you're probably going to push back into 200 in a hurry. This is definitely a level we need to be watching as well. The $200 level, it's going to come quick. It's going to come violent in my opinion. So definitely be watching this area. That's going to be the area to watch if we perform well from CPI. We've tested this $200 level every single time we've mounted above 187. That's why I love it so much. Good CPI. Tesla's my number one stock to watch. No ifs, ands, or buts. That's what I'm watching there. Next up, Microsoft. I think you're getting value here. I think you are dropping. I think there's value in the waters here. Microsoft, you're below 283, so I think you have to be careful. I think you're looking to see how we respond now from this level right here. Let's break that away so you can see. But essentially right here, going into around 281, 280, you want to see how you respond from this level. That's what's going to be big for me. But again, if we have good CPI, chances are you don't come down and test that area. But you can see this level has been massive, 280.3, going all the way back to October 2021, major support and resistance. So the fact that we haven't tested this since we broke above it is telling for me, but something I'm definitely looking for, trying to prepare myself for. I do like the opportunity here. Definitely watching Microsoft. Love what I see. Very interesting play for sure. Honorable mention, Coinbase, because I know everyone here has questions about it, and don't hear me talk a lot about crypto. Coinbase, absolute dog. I mean, if I was Michael Vick, this would be the dog that I was picking up right here. I'm telling you right now. Michael Vick in his prime time, he was getting off the jet with the Philadelphia Eagles, and he was like, the Falcons. Hey, boys, I need my dog. This is what he was picking up right here. Coinbase. I think you're a little bit at risk right now. But again, this is why, I'm making the video in the after hours. This is all about reactionary trading. We react, right? We react to news. We react to fundamentals. We react to technicals, right? We don't play the guessing game. We don't buy before the breakout. We buy when we retest, right? That should be put on a shirt. Patent pending. So, trademark pending, sorry. If you look here, you have upside into 77, okay? But honestly, Bitcoin has already started running. So as I look at Bitcoin, I start to see dollar signs. Dollar signs. Call me TY, dollar sign. New official name, please. When I go to my grave, that's what I want to be on the headstone. We're coming into this big level. This is still where we're at. I do believe CPI comes up positive, Nasdaq will run. Bitcoin, you got upside potential. The upside potential is getting interesting too, because you're probably, if you get above like 32K, you have room up to almost 40K, 39-ish, right? 39 to 40K. A lot of upside. And again, I'm okay being wrong, right? I had no skin in the game though. I'm not a fan of Bitcoin here. I'm really not. We have all these fundamental issues, but even I have to be aware and I have to acknowledge areas of the market where I'm wrong. And Bitcoin was one of them. Bitcoin continues to prove me wrong, continues to move up great. But I will say though, if you do not have a good CPI reading, I believe you get trapped in this range. I believe sellers take control. If CPI does not perform, I think you get stuck back below 29K. Sue me, attack me, get mad at me, whatever. I would love to see people's comments here as well, because I know a lot of you guys specifically are targeting equities and options. And again, that's the bread and butter here. But again, we look at Bitcoin. I would just love to see people's opinions on it, because I would love to see ultimately, do we actually think it's a store of value? Do we actually think that the store value is the same currency that Russia and China are like trying to control right now? I really would love to see opinions, right? All lenses. I'm not going to troll, I promise. Comment zone is a troll-free zone as of lately, so, sue me, right? That's a wrap. That's going to wrap the video, guys. If you have any questions, please comment down below. I would love to go over your questions. But right now, this isn't going to be the most in-depth video giving the most targets or anything like that. It's all about just watching these indexes, and you're going to know how we're moving fundamentally based on CPI and based on if we break these levels. CPI comes out poor and we break back below 12.95. Boom shakalaka. We're trading it to the downside, targeting that 200 SMA probably, right? But if it doesn't, sit on our hands, we wait, and we wait for our opportunity to strike. Opportunities will be on Twitter. I'll be posting stocks on Twitter as well. So keep your head on a swivel. We're excited. We got big opportunities. We got volatility coming. And I think this is going to be a good time for options very soon. This is what we've been waiting for like the past 3-4 days. Love to see it. We'll be right back at it. I'll see you guys tomorrow.